We found a stock that we've ranked at 8 out of 10, and it's a direct play on the cost of living crisis hitting people's pockets around the world. And according to Trackstar, our proprietary stock search database, this stock is the #1 credit card company being searched for by financial pros over the last month. Now, we all know that the rising cost of inflation is eating away at consumers. According to Bankrate, the average credit card rate sits at 18.7%, the highest level in 30 years. Visa is the largest player in the space, and despite a difficult economy, Visa grew its revenues by 20% in the last year. But is that all about to change? Now, Visa is the largest publicly traded credit card company, and through Q3 2022, the company had 1.2 billion credit cards and 2.8 billion debit cards in circulation. But unlike competitors like an American Express, Visa does not carry consumer debt or loans. It simply processes transactions. And with consumers increasingly dependent on access to credit, Visa is in the right seat right now. Despite increasing competition from fintech, Visa has doubled its revenues over the last 6 years, and it rewards its investors, returning $2.9 billion worth of capital to shareholders, with future dividend rate rises and share buybacks in the pipeline. And this is testament to the strong financial position the company is in. When we look at measures like PE gap ratio and price to sales, Visa is a bit overvalued compared to its peers, but the combination of market dominance, growth, profitability, and dividend safety are reasons that investors don't mind paying a premium for its stock. Visa is a highly profitable company. Its net income margin of 51% can't be touched by any of its competitors. The same is true for its EBITDA margin of 70% and its EBIT margin of 67%. And the company is a cash cow, generating $18.8 billion in cash from operations. And despite a difficult year for the economy, Visa has grown substantially, with revenues up 21.5% over the last year. Visa is in a strong financial position as it continues to stretch its lead in the credit card business. We'd wait for a dip into the $185 range for an entry to establish a long-term position.